conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. I now hand the conference over to Mr. Nikhil Kumar, Managing Director for TD Power Systems Limited. Thank you, and over to you, sir.
Thank you, everybody. Good afternoon. Thank you once again for joining us on our earnings call. I trust all of you would have received our results and investor presentation. Moving on to the financial performance for 9 months ended 31st December 2024. Consolidated, our total income on consol was 9.43 billion versus 7.48 billion. Same period in the previous year, an increase of 26%. Profit after tax and other comprehensive income for the first half of the year is 1.21 billion versus the profit of 0.88 billion, an increase of 37%. We continue to maintain a strong cash position of 2 billion. Standalone, our total income on standalone basis for 9 months was 9.02 billion versus 7.32 billion over the same period in the previous year, an increase of 23%. EBITDA for 9 months is 17.45%, including other income excluding treasury income. Profit after tax and comprehensive income for 9 months is 1.09 billion versus profit of 0.88 billion the same period previous year, an increase of 24%. Order book of manufacturing segment is 13.09 billion, which consists of 9.6 billion manufacturing business and 3.83 billion railway business. Sales in aftermarket is 0.13 billion and 0.03 billion is Turkey business. Export and deemed export excluding railways orders is 66%. The order inflow for the quarter is 4.07 billion INR, highest ever since the inception of the company. Order inflow has increased 52% quarter to quarter and 40% in the 9 months and 9 month comparison basis. 71% of our quarterly order inflow is exports, while 39% is domestic. We have seen some traction in the domestic order inflow during the quarter. Domestic order inflow for the last 3 quarters has been percentage-wise 28%, 27%, 32%, 81 crores, 96 crores, and 130 crores respectively. Order book, market situation and guidance. The order inflow continues to be very, very strong from export in the generator and motor business compared to the previous year. The order inflow is still mainly dominated by exports, but over the past 3 months, we're also seeing the domestic order inflow increase. The increasing trend of domestic order inflow is also part of Q4, which augurs well for steady growth in the domestic market. The domestic market order inflow in absolute numbers has been increasing gradually, as mentioned before, 0.81 billion in Q1, 0.96 in Q2, and 1.36 billion in Q3. On a 9-month basis, the order inflow of domestic is still down 10% compared to last year, showing the overall situation is relatively weaker. However, one should look at the increasing trend, and we see the increasing trend continuing in Q4, so we're confident of domestic demand holding up for FY26, although for TDPS is exports that is the main backbone of the business. In the international market, on 9-month to 9-month basis, the export order inflow has increased by 3.5 billion from 4.01 billion to 7.52 billion, which is an 88% growth. We have extremely strong order growth in the order book and export business from gas turbines, gas engines, and motors. Exports and lead export inflow is 71% of the total order. This shows the overall strength of the company in all geographies over the world, presence in multiple sectors like gas, hydro, traction, clean energy like biomass, heat recovery, etc. Most importantly, we're cutting deeper into the market and winning greater market share due to greater acceptance of our products. The gas engine and gas turbine business continues to be driven by demand on CHP, that's combined heat and power plants, AI, server farms and data centers, grid stabilization units, and Ukraine. Demand is extremely high. Future forecasts are extremely high for the next 18 to 24 months. This is important. We have received renewed commitments from all our customers that the investments for AI in the next 18 to 24 months are intact, and there will be no changes in the trajectory of power capacity addition in the U.S. In fact, with the hold on all wind projects in the U.S., more capacity addition is forecast to come from gas turbines, which will be positive for TDPS. They're working around the clock at the moment, and once the new plant comes in, we will have some relief on capacity. We have received orders from the Turkish market recently in Q4 for 0.46 billion for execution in FY26. This is the first large order after a long time. There are more inquiries in the pipeline, and we can expect steady business to come from Turkey in quarters to come. All orders from Turkey are denominated in euros, so we stay immune to high inflation from the local market. Motors, we have given some highlights of our motor orders in the investor presentation. These examples show that we are continuing to make inroads in the market with references and establishing our brand name and credentials. These references will trigger larger orders in the future. We are at the foundation laying stage and increasing our footprint in India and worldwide. The motor business growth is going as per plan. Once again, we would like to mention the approximately 0.5 billion order we got from Nuclear Power Corporation in Q4, which is a big breakthrough order for TDPS. In general, the export business is the key driver for our growth for generators and motors, with demand coming in from multiple markets and multiple verticals. In particular, the gas segment, both gas turbines and gas engines are exceptionally high and will continue to be so for the next 6 to 8 quarters. The future growth will be enhanced by traction motors, and other new products as and when they are introduced. Guidance for this year, FY25, will continue to be 12.75 billion, and initial guidance for FY26 will be 15 billion with an upside potential based on the current order inflow rates. In conclusion, we are poised for another round of growth. We see exciting opportunities in front of us, and we're gearing up to meet the demand with our new and existing factories. We have just a small fraction of the world market share, and our growth potential is huge. On top of this, we are still bullish in the domestic market, and we strongly believe that there will be growth coming after a short pause. India is a severely power deficit country. The macro situation on power has not changed. All large industries need captive power plants. This brings me to the end of my initial remarks. I'll be now happy to address all the questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bobby J from Falcon. Please go ahead.
Yeah, hello. I wanted to know what would be the impact of the high storage.
You are not audible, sir.
Hello, can you hear me?
Can you speak a bit louder, maybe?
Yeah.
Okay, I can hear you. You can continue.
Yeah, my question is, what would be the impact of high storage battery systems on your generators? Because right now, some of your generators are used as backup supply, but if batteries do this job, then what would the impact be?
Batteries are forming a part of the overall power installation, but the overall demand for power is still so high that batteries are still a very, very small percentage of this mix. Batteries also tend to be more expensive. So we don't see the battery business, at least for the next 6 to 8 quarters, impacting our business at all.
Okay, I understand. Thank you.
And just to continue that, batteries can only store power and deliver power for short periods of time as backup. Whereas if you want to have backup power for longer periods of time, or you anticipate that there could be a peaking demand and things like that, the batteries is not the ideal solution. You need to have regular power generation from gas. And so there are increasing number of critical applications where you cannot risk having limited capacity from a battery. You need to have the backup from gas. And so we are seeing that the demand for our products is not really impacted at all from this battery solution. Yes, the battery to some extent of the market is going over there, but it's not coming into a large-scale power generation that we are involved in.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Ganesham from Unifi Capital. Please go ahead.
Congratulations on your performance. Great set of results. I have 2 questions, please. The first one is broadly on the guidance that you provided to us, right? Typically, Q4 tends to be a stronger quarter than Q3. So if I extrapolate it, then I think that 1,275 crore number is sort of, we can easily achieve it or we can slightly exceed that. But is there something that I'm missing? That's the first part. And the same on the guidance that you've given for FY26, right? So if my understanding is right, the new capacity can churn about 400 crores in revenue. So if it comes in second half next year, that's 200 just from the new facility and about 1,300 from the existing facility. So basically, the execution needs to be on spot, so it's able to run at 100% capacity from the day it's commissioned, or you have to build an inventory, right? So which way, how are you going to basically ensure that we'll be able to achieve the guidance that you sort of set out?
Yeah, thanks a lot, Ganesh. Thanks. Good point. So we hold on to this year's guidance of 1275. We're running flat out, but we have certain limitations on how much more we can produce. But we're holding on to the guidance for this year. For next year, the 15 billion is a initial guidance, and we are, looking at the way things are going, we're definitely going to do much better than that, and we will upgrade the guidance in the upcoming quarters. But looking at the way the order inflow is continuing to be, looking at the demand for the products, it's going to be a most likely scenario. So we will start commissioning our new plant around stage-wise around middle of Q1, and then it will be fully in line in Q2. So we'll start seeing increases in our production in Q1. We'll see increasing in our numbers in Q1. We'll see the further increases taking place in Q2. So execution is critical. We have to complete everything on time. The orders are there. Customers are demanding the products that will be delivered on time. So we are under pressure, and we are working around the clock, not only in our factory right now, but also working around the clock to make sure the new plant will be commissioned on time. So we have to make things happen.
Okay, so maybe I'll connect offline just with a few more details on that. And just broadly, a second question, if you don't mind, is the order book inflow. I read in the presentation you mentioned the current inflow of about 400 per quarter would be sufficient for us to deliver on guidance, which I'm on the same page as you. What I'm trying to understand is, would I be right in saying that you continue to expect a larger part of this 1,600 crores annualized would come from exports, some moderate growth from domestic? Then you have the railway, some portion of it running out, but I can see you won something in Germany, right? So how should we think about it as a whole? If you had to sort of mentally break down the 1,600 crores, where would you see that split land actually?
So right now we are still, 400 is the current order inflow. So if you analyze it, we have 1,600. But let's say we're talking about 1,500, which is the current guidance. From that, while current guidance, the railway business will still be only 120 crores, which is the current Alstom order or current order for the e-loco project in India. The export jobs will, although they will start by Q3 FY26, they will start. The volume production will start. We'll not see significant numbers coming in from this business in the next financial year. So we are not factoring that in. We have to start, but it will not be in full swing. The full swing will start early in FY26, both for the German market as well as for the US market. So those numbers will then go into 26. The product, the other product, that means the motor and generator business, will then have to deliver something like 1,400 crores to achieve the initial guidance of 1,500. And looking at the current inflow rate of 400 crores per quarter, which is excluding traction, I think we are, you're right. And I also said we will definitely upgrade the guidance.
All right. Thank you. I'll come back in the queue for more questions.
So we have a lot of margin. We have a lot that, we don't have a problem. We're not going to have a problem with numbers. We have to get our plant in place and start producing more.
Understood, Nikhil. Understood. Thank you. I'll come back in the queue for questions.
Thank you. Participants who wishes to ask a question may press star and 1. Next question is from the line of Anand Trivedi from Nitin Capital. Please go ahead.
Yeah, hi. Congrats on a good set of numbers. The first question I had is, are you all at all exposed to the US? And if so, are these Trump tariffs, do you expect them to impact you?
Our exports to the US will be something like 8% of our overall turnover. And the products that we are exporting to the US, to our OE, to the gas turbine manufacturers over there are, it's a 2-year qualification which is required for any other generator manufacturer to, let's say, replace us in the event that duties do come in. We've been talking to our customers about this, and right now, we're all waiting to see whether the Trump tariff will also apply to India or not. It may or may not, we don't know. So there could be if there is a tariff coming in, then for the short term, that will have to be passed on to the market. It will have to get passed on to the market. In the longer term, we will have to see where we can manufacture, where the duties will not apply. And but essentially, our customers with us, and we don't expect a disruption of the business to take place. They're with us.
Okay.
And they also cannot afford to requalify a new product. It takes a lot of time. They make a huge investment for it. So for the machines, for the turbines which we are qualified for the moment, I think that the customers will run with us. Short term, if they have to pay duties, they'll pay duties. But medium term, we will have to be with customer, and TDPs will have to find solutions.
Got it. You also mentioned that 70% of the order book is export and domestic has been relatively slow. Can you just talk about why that is the case, given there's so much opportunity for power in India?
The demand for power in India is extremely high, but it depends on the investment climate. Everything depends on the investment climate, right? So if investments are taking place, then the power capacity addition will take place. Our business in India is relatively narrowly focused to the steam turbine business, and the steam turbine business is mainly for captive power plants for large industries. So it is, in that sense, it is dependent on investment. If that investment slows down or whatever, for whatever reasons, then this business in India for us also will slow down. So that is it. But what I said is, we're not seeing that this business is collapse or something like that. We're just seeing the business is tapering off from a higher level of growth to a more moderate level of growth. But nevertheless, it is growing. And we're seeing that in our order inflow, quarter on quarter from Q1 to Q3, the absolute numbers have been increasing. So we're not worried about the domestic market. We're just factoring on a lower growth level. And we believe that I think that having a steady 8-10% growth level for a longer period of time is actually healthy for the market.
Got it. And last question on my side. As the exports mix in your business grows, Do you see margins also going up from the current 17%, or you think margins are healthy where they are?
The margins, export business, of course, margins will be where they are. One of the things that we have to also, we are very heavily exposed to the euro. We have a lot of sales in euros. So, currently the euro is relatively weak against the dollar. It's like at 1.03, 1.04. It was 1.1, 1.12 just 6 months ago. Although we have hedged currency forwards, the relative weakness of the euro does affect margins. So, with the forward covers and everything, we are going to be in line with whatever margin projections they have made. We have the third plant coming up. We have been already hiring for the third plant. So, you will see that some of the costs associated with that are now already being booked by the company. We've been hiring, we've been training people, some of the things I would have put a cap on the EBITDA margin. So I would say factoring something like 17.5% or, taking to say between 17 18%, I think would be where we're going to be for this financial year. Next financial year, of course, once things are running at full pace and, we absorb all these costs and we're going at full capacity, I think the margins will once again improve. But let's talk about that towards the end of 26 and 27. But for now, I think 17.5 is a realistic margin.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Piyush Selvadurai from Sundaram Alternates. Please go ahead.
Yeah, hi sir. Thank you for the opportunity and congrats for a great set of numbers. So my first question is on the gross margins. They have slightly come off this quarter to, I think, 33%. Can you help me understand, is this because of the forex which you were mentioning?
No, I think there are a number of reasons. There's a small shift in the gross contribution level. I feel that it is not possible to, when you have a varying product mix and some quarters we may have more aftermarket business, some quarters a little bit less. So we have a quarter on quarter to be delivering exactly the same gross contribution is difficult. But overall, we look at our performance for over a 6-month period or a 12-month period, and there we have given the guidance for gross contribution. It will be what it is. So please, the quarter on quarter is due to these fluctuations in product mix, currencies, or etc.
Sure, sir. So also we had talked about in the last con call that we will be hiring a lot of junior level employees in the first quarter, but the ramp up of the capacity will happen in first quarter. So would the margin be impacted for the next year? Anything if you can help us understand?
No, not as I said. I just spoke to Anand and said that you can please expect something between 17 to 18% EBITDA margin. 17.5 would be realistic to put in for next year, considering all the costs that we're going to have, considering the ramp up, considering the product mix and everything. So should not be judged on a quarter on quarter basis. I think looking at the first snapshot at the end of H1 would give a good idea. We do have top line. We have strong order inflows from all sides. We have big pending orders. We have top line, so we have to execute. And with the top line will come operating leverage and growth. So I am not at all worried at this point. We have to execute. That's number one. We have to deliver to our customers, and we have to put our plans in place, get our quality right. So there's a lot that we have on our plate right now, and margins will follow.
Sure, sir. My last question is on the domestic orders. So I think it has seen good recovery this quarter. If you can help me understand what are the sectors you think are driving the recovery, and what do you think about domestic order inflow for the next year?
I just said the sectors are steel, cement, and the normal steel particularly continues to be strong with a lot of ordering taking place in steel still for waste heat recovery, also for basic power generation. And 8-10% domestic growth, domestic market growth is what we have factored into the plan. If it accelerates, well and good, we'll be happy.
Okay, thank you, sir.
Thank you. The next question is from the line of Rahil Shah, an individual investor. Please go ahead.
Thanks for the opportunity and congratulations, sir, for the great set of numbers.
Thank you.
I have three questions. One starting with for past few quarters we have been reporting a strong order inflows. Can we assume that the existing run rate of this 400 crores per quarter is the new base for the next 4 to 6 quarters?
We can certainly say that would be the average new normal of the average order inflow for the next few quarters. In some quarters we could have greater than 400. In some quarters it could be a little bit less because we are present in multiple sectors, multiple geographies, multiple products. We win some large orders, then in those quarters you would see a spike. But yeah, it's going to be the new normal. 400 could be taken as being the new normal. We do expect this to be the average order booking, considering, let's say, 3-4 quarter average.
Understood, sir. Understood. So my second question is around, given the rate of the order flows that we have, it is very much possible that the upcoming third factory will get fully utilized by mid FY27 level. Are we planning to add the fourth facility in FY27 itself, and what will be the amount of capex involved if we do so?
No, we are not going to be putting a fourth facility. In fact, we have identified a huge potential for us to use our existing facilities in a more efficient way, using Japanese methods like Kaizen and lean manufacturing, single piece flow. There's a lot that we can do further automation. There's a lot that we can do to get more out of these existing assets after we finish this investment this year or this calendar year. I personally believe that at least up to maybe 2,300 or so, we will not need a fourth plant. So any decisions which have to be taken will have to be taken only after 28, which is quite a way from now. After we put in this investment, the focus immediately is going to be on getting this investment up and running, and parallelly the plans are already going on how do we improve throughput, how do we reduce cycle time, how do we reduce inventory, how do we implement lean manufacturing, how do we increase automation, and manufacturing excellence is going to be the theme on how to get more output from the existing assets, and that obviously will lead to better EBITDA margins, operational leverage, better financial performance, and that's the direction they're going to be taking after this investment is over. We're not going to rush into the fourth plant until we completely flog these assets.
Understood. My last question is, the company has recently announced few orders in traction motors. How big can the traction motor business become for TDPS in the next 3 to 4 years? Can we expect the traction motor segment make a big inroad in the international market, similar to what we have achieved in gas engine, turbines, and hydro segment?
Short term, yes, we have an upcoming order from the European market. We have an order from the US market, and we're also supplying to CIS countries. So we would like to stabilize this production. The moment we stabilize the production and we're delivering high quality, these businesses to these customers itself will increase. So we have a good scope to even up to even talking about, let's say, doubling this, what we have projected in the market. We have that scope potentially if we do a good job. So the focus of the company is going to be to deliver high quality products to these existing to new customers, and then we have the potential to ramp up the business even further. It's around 1 billion, 1.2 billion right now. It could be potentially 3 times this size.
Understood, sir. Understood. I'll get into the queue for the next set of questions.
Yeah.
Thank you. The next question is from the line of Kuber Chauhan from Anand Rathi. Please go ahead.
Yeah, congratulations on good set of numbers and appreciated on the good numbers as well. My question is regarding regarding the Turkey order inflows as you mentioned. I just wanted to know that is it more sustainable and how the demand is looking from the Turkey?
So it started once again. The business has started once again from Turkey. So after a long time, we have picked up this one order. It's around 3 million euros, so somewhere around 0.26, 0.27 billion INR. And there are a number of other inquiries in the pipeline. I feel that the market is going to slowly revive and slowly come back to what new normal. It's, I think, early days for me to give such a strong prediction. But there is action once again in the market. And we will be happy to report more order inflows. We're active once again in the market. We're well established. We're still the only manufacturer in that country making large generators. So whatever business comes from that country where they need made in Turkey machines will come to us. And let's wait. We hope the market recovers further. But it looks like, looking at the inquiry level, that the pipeline is again filling up.
Understood. And with the new capacity coming in line, so when can we expect the full utilization? In which quarter we can expect?
Sorry, could you repeat the question?
As the capacity is coming online in next year financial year, so
the new capacity will be partly in Q1, partly and the rest will happen in Q2 in next financial year.
Okay, so peak utilization would be in Q2 of next financial year, right?
So the plant will be fully ready by end of Q2, and we will see the full impact of the capacities in H2 next year.
H2 next year. Okay, understood. Yeah. Thank you.
But we partially commissioned one part of the plant in Q1, and the rest in Q2, and then the ramp up will take place, and you can say the full impact will be felt in H2.
Okay. Got it. Thank you.
Thank you. The next question is from the line of Ankit Soni from Sharekhan. Please go ahead.
Sir, good evening. Congratulations on the set of numbers. So just wanted to understand on the one thing, do we have any further update on the domestic traction motors order which we were expecting?
No updates.
Hello?
No updates.
No.
Yeah, sorry, no updates.
Okay, fine. And sir,
we have been asking, but unfortunately we have nothing new to report.
Okay.
But also, conversely, we're not depending on that for our any growth or any replacement or what might happen after 28 when the existing order runs out. We're not waiting for that to happen. We have made alternative plans, and when that stops, something else will, all the things we're doing right now will take over that, and we have 3 businesses, one to Europe, one to US, one to CIS. So if the Indian repeat order comes, great. If it doesn't come, it's okay.
Okay, understood. So just wanted to another question onto the this nuclear plant, what would be the strategy domestically with recent announcement in the budget for nuclear plants and all? What would be our strategy? What would be the target addressable market, and what would be the total BOM for the particular plant?
Okay, look, I think the announcement, nuclear power plants have a long gestation time. So it could take even 1 decade to build a new nuclear power plant. So the only thing what we can say is that it will be a long sustainable cycle for nuclear in India for maybe decades to come. For us, we are focusing more on the existing nuclear power plants. That means the machines which need to be replaced. And there's a lot of old Russian equipment in the existing nuclear power plants, and the business that we're getting right now are basically replacing existing equipment, and there's a lot that can be done in this part of the market. And gradually we are moving from out of dome, and now the attempt is to get into inside the dome. Once we get qualified, now we're fully qualified outside dome and getting into the qualification for inside dome, then we get automatically approved for the new power plants also. And all I can say is that nuclear power plant business for India, motor business will be a steady business that we're going to get year on year. It's going to be part of our overall portfolio, but it's going to be a long cycle. And for us, it's important to be one of the key suppliers, motor suppliers to NPC.
Sure. Thank you, sir. That answers my question. All the best.
Thank you.
Thank you. The next question is from the line of Mihir Manohar from Carnelian Asset Management. Please go ahead.
Yeah, thanks for giving the opportunity. And congratulations on a good set of numbers. Sir, lastly, wanted to understand on the motor side, I think 220 crores of order book which is there on the railway side. So how should one see the execution from this piece over the next 3 years? And what could be the incremental order flow that can come from this division? Wanted to understand that.
I think I just answered that, but we have a order from the European market, we have an order from the US market, we have an order from the CIS market for traction motors. These three are going to be the main focus of our production and sales for the next 2 years at least, and there's a scope, as I said, for us to, if everything goes well and we achieve the full potential, to be around 2.5 to 3 billion rupees, and that's the goal of the company, to take it to that level.
Sure, understood. Second question was slightly a long-stretch question. When we see the advancement which is happening on the GenAI side, given this now DeepSeek, I understand this is 30 days, but do you see any impact on your data center side of the demand which you are getting?
No, actually, so there is no change. In fact, just this morning, there's a headline article from the Financial Times newspaper, where all the big large tech companies have reaffirmed their capex commitments for AI, notwithstanding the fact that DeepSeek is there, and they feel that as the costs keep coming down for AI, there's going to be a wider and larger implementation base, so it becomes more accessible as it becomes cheaper. The overall power demand, as forecasted, and the investments which they forecasted are going to, no one is backing off, and that's from the end user side, the actual IT companies, the tech companies. And our customers, the gas engine, gas turbine guys, they have clearly told us that there's no change in the demand situation for the next 18 to 24 months, and whatever forecasts that are there are in place to have the capacities ready. And they are saying that the thing is that most of them have got long-term commitments. They have advances, non-refundable advances. They have these contracts locked in. And since there's no let-up of the investment from the tech company side, which is confirmed by the newspaper article today from the Financial Times, we believe that there's going to be no change in the situation for us also going forward.
Understood. Sure. That's it from my side. Thank you very much.
Thank you. The next question is from the line of Himanshu Padar from Burgerlog PMS. Please go ahead.
Yeah, hi. Good afternoon. The order which we got in Turkey is after the quarter end. Is that the right understanding?
Yeah, it's going to come into Q4, Himanshu.
And we had to restart that plant at Turkey. So have we started the process and will it start working?
Now we deliver. Yeah, we have an order to deliver. We have already restarted the process. Okay. It's not difficult, Himanshu.
Okay. And just a color in the besides railway business, in terms of hydro, gas, and steam, how balanced is the portfolio in terms of product profile wise? And is that the right metrics you would like to look at the business, or it would be more of a customers or OEMs whom you look at as that a better mix of understanding the diversity of business? Some thoughts on that, or geography. So how are you looking at the thing? So my question was on
how do you want me to answer this?
No, means how balanced would be on the fuels side? Means will it be now? At one point of time, steam was a predominant business. Okay, but will it be that equal share of these three businesses, hydro, gas, and
so Vinay, you were there on this call, right? Can you please answer this question?
Yeah.
How do you see the balancing of these segments?
In the coming years, I think steam and gas segment are going to be the dominating segments, followed by hydro segment.
And we had a very high hopes of hydro. Okay. Yeah. But we had a very high hope.
This year, So this year we'll be doing the highest turnover in hydro. But hydro is a long, cycle project because from the DPR to implementation, it takes much longer time than the other segments like steam or gas, and it's also a cyclic business. And we are, not seeing a big growth in the next year, but definitely we are going to grow in double digit in hydro. And there are also many refurbishment jobs we have bid for, and in couple of jobs we have already become L1. But as I said, these hydro jobs take much longer time as compared to the steam or gas segments.
And just to add this, the hydro business, as Vinay said, is a long cycle business. Growth is there, but it's not at the same rate as what we're seeing in the gas business. So if we're talking about growth, number one, growth is coming from the gas side. Number two, growth is coming from the steam turbine side. Number three, growth is coming from the hydro side. Okay, and then of course the traction businesses and motor businesses are relatively new businesses for us, coming from a small base. There, of course, the growth is for the company percentage-wise is at the highest level, percentage-wise. So, in terms of growth, I think hydro would be towards, for a company portfolio, it would be towards the lower end. So when Vinay talks about double-digit, say 10-15% growth, that would be at the lower end compared to all the other product categories where, of course, the growth is much higher.
And in domestic market, it would be still majorly steam only, or there also you are seeing some traction on gas side generators. I'm talking about domestic market.
No. Domestic is mainly steam as of now, but gas is, we have some small jobs in gas engine generators, but gas business is almost negligible. But there are many hydro power plants coming in India, small hydro below 25 megawatt. We have already received 3 projects, and these are good value projects, and there are a number of projects in the pipeline. Like all the northeastern states, now they are opening up for the hydro. Otherwise, as on today, the main dominating segment for us in the domestic market is the steam turbine market.
Okay. Okay. Thank you from my side.
Thank you.
Thank you. The next question is from the line of Ganesh Ram from Unifi Capital. Please go ahead.
Thank you. I just want to follow up on what I was sort of going with. On the margins front, right? So my understanding was at some point that procuring steel was getting a bit difficult and we were building up the inventory. So as things stand right now, how much of our top line would sort of be secured in terms of inventory? That's the first part. And then the second part is on the staff costs, right? So we have about 32 crores in this quarter. So as in FY26 Q1, you start adding more staff and gradually ramp up that plant, how will the staff cost sort of evolve, and what would be the associated depreciation impact we should expect? Like, when would the depreciation on the new plant sort of start hitting our financial statements? That's just the first part of the question, and I'll come back for the second.
Okay, I need to get into. I don't have the project-specific details at the tip of my fingers. I think we will take this conversation. We can have another call. But here, basically, the investment, up to now, we have spent around 0.4 billion on the project. And we still have, but the majority of the money is going to be spent, I would say 1 billion is going to be spent, starting from let's say, part of it is going to be this year, let's say 0.2 and 0.8 is going to go to next year. And so we see the full depreciation. So, it's going to be, you can say, 30% of the depreciation will start taking place this year. I'm not even sure we can do that because we're not commissioning anything. Most of the depreciation will start taking in next year. Okay, once we had a commission before we can claim depreciation. And the investment taking place so far in this 0.4 billion is mainly land, investment taking place already in construction, and those you cannot take depreciation immediately. We will see the full depreciation impact coming next year. The manpower hiring has already started. So we already have some costs associated with that in our existing balance sheet and in our existing P&L. But I don't have the exact numbers on how the ramp-up is going to take place right now in front of me.
Okay, no problem. I'll take that question offline where it probably would be better. Yeah. And then just one more, if you don't mind. This is more of a clarification. So my understanding is our existing plant can go up to 1,300 crores. The new plant can take us to 400 crores. But then with efficiency improvements, you're saying you can bridge the gap from 1,700 to 2,300 crores. Would that be the right interpretation, or have I?
Yeah, 1,250 is the existing capacity, 1,800 is the planned capacity, and say we are expecting something like another 20% output more from the 20-25% more approximately from efficiency improvements.
All right, very clear. Thank you, Nikhil.
Thank you. The next question is from the line of Kiran D from Table Tree Capital. Please go ahead.
Thank you for the opportunity. Very heartening to know, Nikhil, because it's 4 years back. I still remember the con call where you said we don't have 9 months visibility. Now we have 24. So fantastic progress. Thank you so much. And Nikhil, I have a more strategic question. In terms of synchronous motors and induction motors, right? So now that we've cracked the gas engine and steam and hydro and various other segments, the next big focus, at least in my mind, is induction and synchronous motors, which is a multiples of this gas engine opportunity in terms of market size. So how do you see us scaling? I know we won some marquee orders. I did read the investor presentation, but how do you see in your own mind, can this be a 500-700 crore revenue business in the next 2-3 years, or will it take much longer to reach that kind of scale? How does the business
stack up from now to then, essentially?
The plan is to take it to that level in not 5-6 years, but not 2-3 years, but 3-4 years. For sure.
Got it. I mean, do we are these orders, the marquee orders that you put in the investor presentation, are these like the base orders on which we're going to win major business?
You see, when you want to get into a large compressor market or large pump market or something like that, first question customer will say, business in the oil and gas industry where you supply motors to API qualification, API standard, hazardous locations. See, we're going after a lot of these very specialized applications. We're going after motors where there's a lot of engineering involved and where the specification is hard. Obviously, prices are always better because we want to go after that higher margin business. Question people always ask is, where's your reference? And then, and although we may have a lot of references in generators, people want to see actual motors also working. So when you look at our list of orders that we have got, and we need to, and they're always delivering some of these machines, then we'll have the references. Once you have the references, then it opens up the order book. Then for all the new inquiries that come, new plants, replacement, etc., it just opens up it opens up the whole business potential for that particular segment, for that particular application. So we will see many-fold increase in the motor business once these are commissioned, once it's successfully commissioned, and we have those references in, and all these sites that we're putting in these motors are all really high-profile marquee customers, high-profile customers. So we can use this, and we will use these references extensively to get more business. What we have done, the orders that we have got in the motor business it's really exciting, and it's going to have a big potential.
Got it. And I'm presuming these are slightly higher margin than our existing business, Nikhil?
Yeah. It's good margin business, I would say. And I really hope that I know that we will, once we crack this market and get larger volumes, it will overall improve the margin profile of the company because these are highly specialized products.
Got it. Last question from my side, Nikhil. We are hearing all the other manufacturing companies who are in the exports business, especially to the US exports, that they need to set up something in Mexico, something in the US, some facility in the US. So, point number A, out of the 1,500 crore revenue will eventually reach in FY26, what percentage of revenue would be from the US? And point number B question is, have you heard any of our clients talk about setting up that facility in the US so that they can procure it easier, better, make in US and all that stuff?
No, so I mentioned earlier in the call that for FY26, something like 8% of our exposure will be US, 8 to 10%. So we are in close contact with our turbine customers in the US about any potential duties that may come. They also fully aware of it. If it is 10%, I don't think it is going to be any change. If there's 20%, then we may look at options. We also have a plant in Turkey. So there are ways that we have options. I think putting a plant in the US will be the last option. Because how long will the tariffs last? And putting a plant in the US or making things in the US is really expensive. Maybe it's even if there is a duty of 20%, maybe even still more expensive to make in the US. Even though you have 20%, it should be cheaper to make in India and pay the 20% duty. So let's see how it works out. Let's see what comes. We're in close contact with our customers. We're watching the situation very carefully. We're not going to lose the business even if the duties come. So, as I said earlier, short term, customers will pay and they will pass through that.
Makes sense, Nikhil. Thank you so much.
Thank you. Participants are requested to kindly limit their questions to 2 per participant. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Good afternoon, Nikhil. Congrats on really good numbers. So, Nikhil, just one question. Nikhil. I just wanted to hear your views on the geothermal market that we were going after, especially in that context, US, anything happening there. So that is something that I wanted to understand.
No progress in terms of new orders. We are actively bidding for new projects in the US, and they are under finalization stages. We are in the race. We are in the final list of approved vendors, and we are hoping that we will win. We're very well placed, and we're hoping we will be able to probably announce something in Q1, hopefully.
Okay. Got it.
There are big projects coming out of the US in the gigawatt category kind of projects coming out of the US.
So when you're saying 8% for the next year, what you have in your mind?
I'm not factoring anything. Not factoring any new projects in geothermal.
Understood. Okay, Nikhil, that's it from my side.
If those orders come, then we will revise our guidance for that.
Understood, Nikhil. Thank you very much, and again, congrats on phenomenal numbers. Thank you.
Thank you. The next question is from the line of Anand Trivedi from Nepean Capital. Please go ahead.
Yeah, hi, Nikhil. As a follow-up, just wanted to see if the data center space, you spoke about that, but is there any sense to how big that opportunity could be in the next 3 to 4 years?
Yes, there is a sense. I mean, we know that the overall power demand up to 2030 for the US market is going to be around 100 gigawatts. That's the number which is in the market. And the current share of gas business in the US is something like 48 to 50%. Now, this new 100 megawatts, there's a lot of discussion as to which fuel is going to take the primary role or primary amount of business from this. And so there are the different scenarios being worked out. There was so now that wind projects have been more or less put on hold by the Trump administration, there is the thought that the gas business is going to dominate the 100 gigawatts. And to what extent, we don't know, but it will be at least, in my opinion, more than the existing share that gas has in the overall power mix of the US, which is more than 50%. So that's a lot of additional business only from the US market. And this will keep everybody busy for a long time.
Okay, it's clearly a big opportunity for you all.
It's a big opportunity. It's a very big opportunity. Not just for us. I mean, if you look at all the large power companies like Siemens Energy, and they all booked out for the next 3-4 years on this AI business.
Mm-hmm.
GE Verona, Siemens Energy, they are really doing well.
Got it. So the last question from my side, you talked about using these Japanese techniques to sweat your assets more and become more efficient. Your current inventory days are around 140, 159. Do you see that coming down?
A part of it is due to the large stocking of steel and copper, not due to manufacturing efficiency. But we will bring it down even if we are going to stock. So we will look at cycle time reduction, it will come down. So the goal is to bring it down, but whether we can do without stocking of inventory of steel and copper, that will again once again depend on the supply situation. And if there's stability in the supply situation, then I would love to stop buying and holding the material because that will free up so much cash for us.
Sure. Okay, that's it. Thank you.
Thank you. The next question is from the line of Rahul Shah, an individual investor. Please go ahead.
Hi, thanks for the opportunity again. My first question is, what is the update on the existing supplies of traction motors to Alstom for the 12,000 HP locomotives? Would this order get renewed after FY29? Similarly, hello?
Yeah. Sorry, I thought you were going to ask me something else.
No.
As of now, we have no information on any renewal.
Okay. The next question is, we have been giving regular orders in the motor segment. How big is the global market for customized motors? What are indicative global market share and which geographies are we supplying? Can motor business exceed the generator business in next 5 to 6 years?
No, I gave a number, something I said that we're going to grow it to 6-7 billion in the next 3-4 years time. So potentially the market is very large. It is 10x, 20 to 15x size of the generator market. So it's potentially we can make it as large as the generator business for us. That is the goal of the company. Higher growth is going to come from the motor business for us compared to the generator business over a period of time. And right now our market share is just not even in the percentage, decimal point percentage in our world stage. So we are nobody in the motor business right now. We have a lot of scope to grow.
Understood, sir. Understood. So my last question is, we haven't spoken about the wind turbine generators for the last few years. Is there any possibility of getting large orders in the near future? Or we have completely given up the segment?
We're not completely given up. I think completely given up would be, but we now and then we get certain inquiries and we follow up on that and we come to the stages for negotiation and contract negotiation, and unfortunately we've not been able to close those contracts because once again we come to the liability clauses, which makes me uncomfortable and puts the company under a big risk. So if we are able to get a customer who's willing to sign something which is better for us, then we will close those contracts. But looking at the nature of the wind business and the nature of the contracts which are over there, it's unlikely that we will make big inroads into the business. So I'm not banking on the wind business for our growth, although we have now and then inquiries. We're talking to big people in the market, but we don't see. I don't see this in my plan for the near future.
Understood, sir. So in the data centers and AI, are we supplying gas engine generators or gas turbine generators to them? And to which OEMs we are supplying this?
So we are currently supplying to a large US-based OEM, and I don't want to mention the name, but it's a large US-based OEM, and it's a gas turbines. Because the large data centers, large AI, they require large-scale power generation. So the machines tend to be 15 to 20 megawatts. We're in the process of getting our machines qualified for a 45 to 50 megawatt size machine, which we're delivering by the end of, let's say it was Q3. And once we're qualified for the 50 megawatt, our business will again, I would say there's a big potential for us to even double our business in the AI sector in 26 and 27. We are putting a lot of effort and to see how we can advance the qualification of the 50 megawatt product. But we have good forecast from this customer once we're qualified. There's a lot of things in the pipeline, and 100 gigawatts that I talked about earlier is a huge market. We want to grab a larger portion of it, and we will.
Understood, sir. So just last question. What's our role in geothermal generators in the data centers?
So earlier there was a question about geothermal. So as I said, geothermal large geothermal plants are coming up in the US, gigawatt size, 1,000, 2,000 megawatt size. And these are mainly, they have PPAs mainly with large IT companies. So we expect that the business geothermal will continue for us and will be a large part of our. But as I said, we have to win that business, right? We have to win that business, and it's not right now at the point when I can say, okay, we have won this business. The market is there.
Thanks a lot for the opportunity.
Thank you. The next question is from the line of Viraj Jain, an individual investor. Please go ahead.
Hi, thanks for the opportunity, sir, and congratulations on a great set of numbers. I just had one question. That of late we have been hearing a lot about small and medium-sized gas turbines that are being run on a mix of hydrogen and LNG gases. I mean, are we capable and approved to supply generators for hydrogen-based turbines?
Yeah, we are our gas turbine customers are progressively making turbines with hydrogen mixed with natural gas. And we have our products in the pipeline which are going to, which will run with this fuel mix. So they are all getting ready for the hydrogen future, and we are also getting ready for the hydrogen future if and when hydrogen becomes cheap enough to be used as a fuel for power generation.
Understood, sir. Thank you so much, sir.
Thank you. The next question is from the line of Ajit Shetty from Echo Quantum Solutions. Please go ahead.
Thanks for the opportunity. Sir, can we assume we can do 2,400 crore revenue in FY27?
No.
So any sort of revenue guidance for FY27?
We have projected something like a compounded 20% growth. And we will upgrade the performance as and when we see once we come closer to those dates. But right now, we will commit that we can do a definite 20% compounded growth year on year.
Okay. My last question is, what will be our capacity after the expansion?
18 billion.
18 billion. Okay. And EBITDA margin, what we can do?
Around 18%.
Okay. Thank you.
Thank you. The next question is from the line of Bobby J from Falcon. Please go ahead.
Hi, could you talk a bit about what is driving the growth for European gas turbines? Is it lack of supply or is it demand? Because the economies aren't growing really, so what's really driving that?
In the European market, the demand is for grid stabilization units, the CHP, combined heat and power plants, and also there is a data center market also in smaller sizes where you need, it's not gas turbines, but it's gas engines in the European market. Especially Ireland is a big center for data centers. And we have been getting steady business and increasing our business in Ireland for data centers. So the dynamics of the market is quite different from the US market, but demand is high based on these factors. And grid stabilization units have a big requirement. For example, this year we're supplying 100 machines of 5 megawatts to the UK market only for grid stabilization. As more and more countries have a larger proportion of their power mix coming from renewables, they will need more and more of these grid stabilization units. So this is a fundamental change taking place in the market. And the irony is that the more renewables you have, the more grid stabilization power you need to have. Because when the sun doesn't shine or the wind doesn't blow, you have hundreds of megawatts coming off the grid instantly. So you need to start these engines within 5-10 seconds and pump in these hundreds of megawatts into the grid, and then run them for a few hours, switch them off, and the production of wind or solar picks up once again. So this demand is structural. It's going to keep changing. It's going to keep improving, and this is a long-term requirement. So the factors driving the European market are quite different from the US market. The US market, the power demand is coming out of AI.
Understand, but in Europe, don't they have their own local suppliers for the generators?
They do. And
how are we able to compete with them? Because
they do, but we compete against them, and they win business.
So it's all tender based. You don't get repeat orders from the same customers. You have to win each tender for each business.
No, so our business is to the prime mover companies like engines or turbines, and they in turn bid with the generator for projects. But let's say it's a large utility, or it's a large data center company, so those will be repeat orders. But they may, a utility may say buy, let's say 100 machines, grid stabilization units this year. He may not buy it again next year, but he may buy it the following year. So that's how the business runs.
Right. So you have a direct relationship with the prime movers. You don't have to bid for tenders with them.
Ladies and gentlemen, please stay connected.
So it's really a global market for us. We were not dependent on a single country as something like that. So different countries have their economies coming up at different points of time, and we have a global reach.
No, what I specifically wanted to know was, do you have to bid through tenders with the prime movers, or do you just continually get repeat business?
We get repeat business.
Right, and the prime movers have to bid for tenders, right, with the utilities. Understand. Okay, great. That's great. Thank you.
Thank you.
Thank you. The next question is from the line of Vimok Shah from Goyam Labdi Fintech Private Limited. Please go ahead.
Yeah, thank you for the opportunity. So regarding the international market, can you provide more specific details about the types of project driving the increased demand for the gas turbine and the gas engine? Like, what is the growth attribute to fracking, data center, or the AI?
Sorry, can you repeat the question? I could not hear you clearly. There was some problem with the line.
Okay, so can you provide the more specific details about the types of project which drives the increased demand for the gas turbine and the gas engine? Hello.
I don't know how to give more specific information. So there could be a AI data farm, or a data center which requires 100 megawatts or 150 megawatts from one large tech company, and they need 5 units or 10 units or 15 megawatts, and then they will buy it from our prime mover customer with our generator. Can you hear me?
Yeah.
Yes. Okay. Yes. So that's all I can say in terms of specific information. And there could be a utility who wants to buy a grid stabilization unit, 500 megawatts. That's how the business goes. I don't know how to give you more specific information, and I can't give you customer names and things like that right now. So we're not allowed to share confidential information.
Okay. So what are the typical margins for the geothermal projects compared to the hydro?
Geothermal projects have better gross contribution. But again, project to project it varies, but they have better gross contribution compared to our regular gross contribution.
Okay. Okay. And just last one is like, so what is expected revenue potential at the peak utilization for this new facility which is coming in after Q2?
So we have capacity. We have the capacity which is 18 billion, which we put up by, we should be ready by end of H1, and then we have given initial guidance for 15. So 15 by 18 would be the capacity utilization that we will have. But if I increase the guidance beyond 15, then that would be the number that we will have to calculate. And as we increase the capacity with from 1800 liters, we can go to 2300, then we will see then the capacity obviously will go up. We have already experience in doing this. If you remember, we have increased our capacity from 700, 800 crores to 1,200 crores with automation and other improvements in the factory. So we have experience in doing this and how to push the envelope and how to plug the assets. And we will do it once again.
Okay. Okay. Got it. Yeah. Thank you. And all the best.
Thank you. The next question is from the line of Raj Saraf from Finvestors. Please go ahead.
So congratulations on good sets of numbers. The question is for the raw material prices movement. As we already know that we have stocked up our raw material for FY26. So how is raw material prices moving forward?
So we see a stable raw material environment for us for next financial year. And if the prices go up or down, then we have to then see the situation for the following year. But FY26, yes, it's here.
Okay, and I'm kind of liking like a shareholder that we are seeing already in investor presentation the highest PAT, highest revenue, highest EBITDA, highest order inflow. So are we on track to post another highest quarter in this quarter?
Can you just speak a little slowly because I'm not able to understand what you're saying?
Yeah, so I'm asking, sir, in investor presentation from last 2-3 times, I'm kind of liking this commentary like highest EBITDA, highest revenue, highest PAT, highest order inflow. So are we on track to deliver again highest quarter like Q4 FY25?
In Q4, yes.
Yeah. Thank you very much, sir. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
And thank you everybody for joining us today on the conference call and presenting us with a number of detailed questions and interesting questions. We will look forward to interacting with you at the end of next quarter, or we'll be happy to meet up with you next few months during some investor conference. Thank you very much.
Thank you.
Thank you.
On behalf of CD Power Systems Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.